How's it going? It is Saturday afternoon. I had a great day. I went for a walk with Rolf and his dog and his wife. That came out kind of wrong. So we walked his dog and his wife accompanied us. So, never mind. Anyway, it was fun. And after that we had some lunch and coffee. Everything is just relaxed. I just did my weekly analysis on the stock market. And now I'm scanning the Forex markets right now for some additional setups. And later I'm going to have the best cocktails in Frankfurt apparently. A friend told me it's a bar called Anthony's. So if you're ever in Frankfurt, check out Anthony's. Apparently they are as good as the best ones in Tokyo or wherever. So what I quickly want to talk about today is the obsession of some traders with risk reward. I think it stops out a lot of traders because they think about the concept in a wrong way. The problem is that a lot of traders think they cannot find enough opportunities in the market because they don't offer a sufficient risk reward ratio. So a lot of people, they simply pass on trades if they don't offer at least 3-to-1 risk reward ratio, which in my experience, at least in the Forex market, is really hard to find. As a swing trader, not as a day trader, it's possible, but as a swing trader, if you put your stops behind technical levels, for example, it's really hard. If you're a day trader and you have stops like based on numbers like 10 pips or 12 pips or so on the euro dollar, for example, then it's definitely possible. As a swing trader, not so much. So the problem is that people plan their trade and then they don't get enough risk reward ratio and then they kick it out. Now the thing is, most people don't trade set and forget. If you trade set and forget and you have a certain win rate that goes with your strategy, then of course you need a minimum risk reward ratio. However, if you are not a set and forget trader, and I think most of you are not, then look at your trading journal. What is your average risk reward that you get on your trades? You don't always lose 1 hour on a trade. In fact, I almost never get stopped out with a full 1 hour loss, which in return boosts my average risk reward ratio a lot. Why is that? Well, if I only lose 0.2, 0.3, 0.5 hour on a trade, that makes up for a lot of trades where, for example, I only get 1 hour, 1.5 hour returns. So I'm totally fine to take trades that only offer a 2-to-1 risk reward ratio, or when I'm day trading, even a 1-to-1 risk reward ratio, because I know I get in and out of the market very aggressively and quickly. And if the position doesn't go my way immediately, I get out immediately. So I just wanted to say that quickly. If you have efficient trade management, you don't always need massive risk reward ratio on your planned trades because you don't often lose 1 hour on your losing trades. So take a look at your journal, see how often you take a full 1 hour loss. If your trade management becomes efficient, that should be less and less and less trades. Maybe 3 out of 10 losses should be a full 1 hour loss, and the others maybe 0.5, 0.4, I don't know. And that really quickly adds up, and you can become more aggressive in taking trades that offer only a 2-to-1 risk reward ratio, for example. And then find more trading opportunities and also not be too scared about taking trades with lower risk reward ratios. And of course, also another thing I can tell you is that you shouldn't put a take profit order at your take profit level. You should maybe put a take profit order there for 50% of your position. If price blasts through due to a news event or anything, that you can ride it higher, and then you can simply increase your risk reward ratio that way, right? Do not be not picky about your entries, but become more aware of the concept of a dynamic risk reward ratio. It changes as price moves for or against you, and that can skew a lot of trades in your favor if you have effective risk management, trade management, and you can only improve that with a lot of experience and a lot of journaling. So it's the weekend, take a look at your past trades, see whether you could have improved your average risk reward by doing something different in your trade management. Thanks for listening. I'm out for cocktails. See you in the next video.